See the L&T Tech intraday chart, the stock is down over 7%, clearly reacting to the earnings that have been reported. So what exactly happened in the quarter gone by? I'm being joined now by the top management, Amit Chadha, the CEO and MD of L&T Tech, right here live on ET Now. Good morning, Mr. Chadha. Let me begin by asking you first about the guidance front, because that's what the street seems to be disappointed by. No change in guidance. If you look at the rate for Q4, it now stands at a meager 1.5%. Are you being conservative, or are you really seeing that bigger slowdown?
If I look at the quarter that just went by, I do believe that 4.2% sequential constant currency growth, broad-based, 3 of 5 verticals growing at about 4.5% to 5%. Deal wins with the $45 million win plus the 10 million wins that we've had. I do believe and reiterate that we will end up with a very strong 19 to 20% growth for FY22. Now, we have taken into account the number of working days in quarter 3, the people that took vacation, a lot more people took vacation in quarter 3, and then of course, the holiday period, etc. I don't think that you should infer from this that quarter 4 will be soft. We believe that quarter 4 continues to be something that we will try and deliver within the trajectory that we've been doing in previous quarters. So do not take the 19% as a reference, but please use 19 to 20% as a reference as you look at this.
Okay, you're saying the fourth quarter will not be soft. So if I can talk about the overall demand momentum, what are going to be the growth drivers? And more importantly, and that's what the street will want to know, just because the guidance is the same, how will you accelerate your growth?
So number one, we do believe the market CY22 as well as CY23 appears to be fairly strong in the areas of electric autonomous connected vehicles, digital products and digital manufacturing, 5G with the spectrums rolling out now, sustainability where people are starting to do pilots with us, as well as medical technologies because of telemedicine, etc. 5G as well as sub 5 nanometer chips as well in the telecom segment. So I do believe the demand is there. There's a lot of momentum. The deal wins that we've had this quarter 3 have been par with what we've had previous quarters. The pipeline has actually improved quarter on quarter as well. And I do believe that the quarter 4 momentums in deal closures will continue as we move forward. In fact, if anything, and if I one more thing is that I do believe that with what we see in the pipeline, in the closures, etc., we are still on track to deliver $1 billion of run rate annualized in Q2, Q3 of FY23.
Now, if I look at the large deals, $10 million plus deals, there seems to be some tapering off. Is this one-off? Could it recover in Q4?
It was a quarter 3. There were some deals that got shifted into January. And so you will see that coming out in quarter 4 when we deliver our results. You will see that coming back. So I'm not too concerned about it because my total deal quantum, net new more than $1 million wins that I've had, has actually stayed at the higher level clip that I've had the previous 2 quarters. But having said that, I do want to make a point. See, in engineering services, clients to give you smaller deals, test you out, and then give you bigger ones. If I just talk about this one client, which has given us this $45 million deal, the first deal we got from them was actually a $25 million deal in quarter 1. And then in quarter 2, they gave us another $25 million deal. And now we've got this $45 million deal. So if I look at it, there is a progression in relationships rather than a big bang 100 million. So if I aggregate these 3 quarters, this particular customer, it's about $95 million of deal win that I've had just from this one customer, right? So I do believe that as you move forward into quarter 4, it will help us. One more thing is that we've had 2 significant empanelments in quarter 3. One is with a technology company and another with a aerospace company. And we believe that each of these empanelments is worth about $50 million over the next 3 to 5 years.
Fair point. But Your margins have been resilient. We are talking about a wage hike. We are talking about the challenges coming for mid-cap IT companies because of talent loss. Do you think you will be able to sustain your margins despite the wage pressures?
One, like you said, our EBIT, which was in quarter three of last year, was 15.2%. It's gone up to 18.6%. If I look at our PAT, it was at 13.3% and has climbed up now to 14.x%. So I'm very comfortable at this range, if you ask me. And going forward, I do believe this is sustainable as we move forward, because last quarter also EBIT was at 18.4. So we've come to that zone of 18% plus. I don't believe we'll have to step back from this as we move ahead.
Sure. Also wanted to understand, there is a scope for margin expansion because of the improved pricing as well as realization, as we understand. Do you foresee the same? And if so, what could be the key levers here?
Look, we do not give revenue guidance, margin guidance. If I look out 5 years, right? If I look out 5 years, I look out 3 years, our aspiration, of course, is to improve, right? But there is investments that we will continue to make because we are an engineering company. We'll continue to invest in labs. We set up a lab in Dallas for 5G recently. We're going to open one up in Munich as well. We've got one in Mysore and Bangalore. We continue to make investments in training, hiring people. We got 1,900 freshers on board in this last quarter alone. And so far in the 3 quarters, we've taken 3,000 freshers. I do believe all this requires investment. It requires timely money to be spent and deployed. But going forward, we will we'll try and make sure that we stay in these levels, and then we look at further expansion from there.
Right. Lastly, I also wanted to talk about the headcount addition as well. Is this largely backfilling on account of attrition, or do you actually see a need because of the demand momentum and thereby this hiring addition?
Sure. So I'll answer your last question first. FY23, I can confirm to you, we'll have the same number or a similar number of freshers that we are taking in FY22. So we've already made offers. We have actually, this time around, we're paying interns as well, right in colleges, to make sure that they join us right after they graduate. We've been working with universities in that area. So I can confirm that the number of freshers we'll take in FY23 will be similar to what we're doing in FY22, number one. Number two, the reason we took these freshers on board is because I believe that our business in ER&D continues to require to get the right pyramid in place as we move forward and launch into further growth. I mean, we want to get to about $1 billion run rate by Q2, Q3 of FY23. I want to make sure that I have the right pyramid going forward. I have the right skill set to be able to deploy to handle my customers' demands. So I think that's important for us to do that. Third, from an attrition standpoint, we did lose people. I mean, our attrition went up by 1% trailing 12 months. But I do believe that quarter 4 will see us stabilize and improve and reduce attrition from there.
Okay, Amit, great to have you on the show and get in all the insight on where the quarter gone by was and where things are headed going forward. Just quick status check on where the markets are up to. So after that quiet start, we've dipped down once again, about 0.5% downtick is what we're staring at. The only good thing is that the market breadth has actually seen a recovery after underperforming yesterday as well as the start of trade today. That seems to be in recovery mode. But let's see where things go as the day progresses.